more than 95% of people don't use a buyer's agent. So yes, they're professionals, but a different type of professional, a more discretionary, nice to have professional, not a professional in the sense that to change in the wiring in this house, I'm definitely going to use an electrician. They're not electricians. They're not dentists. They're not surgeons. All right. They're gardeners. Gardeners are also professionals, guys. Let's not diss gardeners. They're respectable people, but they're not necessary. And that's my philosophy. They're not necessary. The reason people use them more often than not is because all the content in Australia is consumed or like dominated by buyer's agents. They tell you if you don't use them, you're going to make mistakes. And I'm not a big fan of that fear mongering. I've, in my experience, genuinely found that with the right tools, with a dollop of education, and just with that right amount of time, you can do it yourself.
Welcome to Get Invested on the Property Hub podcast channel, the leading weekly show to help you unlock your full self, health and wealth potential. I'm your host, Bushy Martin, and each week I go deep with the best investors, experts, leaders and founders to find out what it takes to break free from the grind, discover freedom and live by design. Subscribe now and join me and get invested in the life you really want. Let's get started. I now want to sort of dive a bit deeper back into the property subject. And given that you help and talk to a lot of people on the journey, I'd love for you to share what are some of the major mistakes that you see investors making or potential investors making?
I think it comes back to that whole concept of 10% of people actually think and 20% of people think they think. So like I've been very fortunate to have, work with like thousands of investors now, and I consistently see that in their portfolios, because I have privy to their portfolios, they're consistently seeing bad property purchases. It might be hugely negatively geared, not anticipating rate rises. It might be just languishing in terms of growth. It might be in a mining town. It might be unnecessarily negatively geared to try save tax. And the thing is, it's not that they've made these decisions themselves. It's these properties, these dud properties, for what have you. It's been made for them by property investment professionals. It's been made for them by a course guru, much like myself, or like a buyer's agent, or even people even worse than buyer's agents who are getting kickbacks from developers for selling you a brand new stock, and it all sounds great, and it's all about retiring in 7 years with a depreciation and living off the equity. And that was like genuinely my surprise. It's like these mistakes haven't been because they didn't know anything and they just bought in their backyard. It's not been because they listened to a friend, although that stuff exists, but it's like the mistakes are because they went with the wrong property professional. There's lots of good ones out there as well, don't get me wrong, and you have plenty on your show, but I don't know if this is a fair statement, but in my experience, having looked at these thousands of portfolios, I literally know every buyer's agent and where they're buying at any time. Most of them, more than 50%, really don't know what they're doing.
Yeah, I'm going to come back to that in a minute because I think it's something that we really do need to dive into. On the flip side of the mistakes then, given your own experience and what you've seen in others so far, what do you believe are the actual keys to successful investment and why?
I think the key to any successful investment is to know it inside out. So whether it's let's say a strategy, okay, so you've got a spectrum of very passive buy and hold, I'm just going to set and forget, all the way on the other side of the spectrum to like active commercial developments or renovations or flipping or anything in the middle with rooming houses, DHA property, NDIS property, like there's a million different strategies. Regardless of what it is, you should know it inside out. Okay. And that's the secret to success. You should, if you even have a glimmer of doubt about a strategy or what to speak of suburb or what to speak of the property that you're going to buy in that suburb, then please, please, please don't be shy to either ask the professional who's selling it to you or get enough educated so you can make that decision yourself. If you even have a glimmer of hope, and set aside, when you're, especially the first property, Bushy, there's so much like effort that's gone into it. You've bigged it up so much that by the end of it, you're like, even if it's not great, I just want to do it because I just want to be done with it, right? I just want to have at least one under my belt, and then I'll start taking things more seriously. That's just the biggest mistake. Don't let your emotions get the better of you. If you need to say no to 20 properties before you get that final one, say no to 20. Say no to, if the buyer's agent is saying, mate, Bushy, we've already presented you 20 properties, like you're taking the piss. So I don't care. Like, I'm not going to buy it until I'm completely convinced and it's the right one.
Yeah, absolutely brilliant. Having the guts to say no and not allow your own impatience to get in the way of a good decision is absolutely spot on, because the one thing that you and I know is that there is thousands of property opportunities out there, and it's changing every day. So if you say no to one, that's not like there ain't going to be any more. So I love that. You've touched on this a number of times during our conversation. That is the importance of a data-led approach. Can you tell us a bit more about your own unique data-led approach to property? Because I think there's data and then there's data. A lot of people bury potential investors with data that doesn't make any difference. Actually, in fact, it could take them in the wrong direction. Can you sort of expand on that a bit for us?
Yeah, sure. So like the way that I've understood it for myself, at least, is that there's different layers, but to simplify it, there's macroeconomic data and then there's microeconomic data. Macroeconomic data, it's very hard to predict anything, right? You can say that inflation rises and therefore interest rates rise and property markets fall. That's kind of logical, but if you look at the history of property in Australia, there's no correlation between interest rates and property.
No.
What to speak of unemployment, there's so many instances of places with 10% unemployment doubling in the next 5 years. So when you take what the media talks about, these clickbaity things, it just confuses you. You're like a rag doll, you're just getting pushed around everywhere. Yep. So what I try to be an expert in is microeconomic data down to the LGA, what we call SA3 to use an ABS term, or ultimately suburb level. And this is where you can actually start drawing more concrete and conclusive inferences between historical and forward-looking data and predictive capital growth. For example, a really simple statistic like stock on market. Stock on market suggests that in a suburb, of all the properties, how many in terms of percentage are for sale? Now, of course, supply is the enemy of growth. We want supply to be low. Okay, so there's one thing that correlates with capital growth, but not by itself. And this is the mistake that they're like, okay, I know one or two stats. It's like, okay, now I can go find a place to invest in. You actually need to have enough checks and balances, 10, 20, 30 data factors, be clinical, be specific, be serious. And if all of them are pointing in the right direction, so some others are a days on market. You don't need to pay for a course to just figure out what the days on market. If it's taking 4 months to sell a property, chances are like demand isn't strong, right? Chances are capital growth isn't about to occur. But if it had been taking 4 months and now it's taking 2 months and it's likely to take just 1 month, now you're onto something. Now you're onto a trend. Then you compare it to something like building approvals. Okay, stock on market is low, supply is low. What about that future pipeline of building approvals in that suburb or around that suburb? If that's huge, then the current growth that suburb is experiencing is going to dissipate very quickly. But if there's no pipeline for any more developer activity, then that current pressure in the environment, in that market, that environment is going to last. So there's so many things you can ascertain that with both macro and micro, but really in my experience, to geek out for a second, the statistical correlation using a multi-linear methodology is more statistically reliable at a microeconomic level.
100% agree. I guess I've been saying for some time now that the thing we need to be very wary of is sentiment, because a lot of the sentiment now is media driven, and the media focuses on the macro, which is designed to scare the hell out of us doing anything in actual fact, but just to keep our eyeball glued to the nightly news. So there's some real danger in that perception thing. But if we come back to that, and 100% agree with you, we're diving into the micro level, which is happening on the local level, then we've got a much better chance of really understanding what's going and ignoring that noise, because if the demand supply exercises are speaking very clearly through data that everyone can get their hands on, then why overcomplicate it or need to go much beyond that? And I love
And
that.
you can also disprove things that are really interesting, Bushy. Like, I didn't mean to cut you off. This came to my mind. It's like, traditional folklore would suggest that if a area has high incomes and has always had high incomes, that's where the most property price growth occurs in the future. It's very interesting that the actual opposite exists. That those areas that haven't had high growth but are experiencing high growth in incomes now, I'm talking incomes, that is where price growth outperforms over the long term. So it's like, it's not the absolute level of data that matters, but rather trends. That is kind of where the secret sauce is.
Absolutely. It's changes that we're looking for, not what's happening here and now. And that's the danger, I think. I'd love your thoughts on this as well, but I get very frustrated with a lot of commentators who talk about property markets, which in my view don't exist because every property in every street and every area is different from the other. There's no apples for apples comparisons. And then there's a total reliance on median prices, which again, don't tell the true story. Because if you've got a quality property in a quality location, the median price means nothing.
Yeah.
So what's your read of all of that?
Yeah, I mean, I kind of hit the nail on the head. I'll just take an example of like where I live. Here, this is a place called Sorrento in the Gold Coast, and there are almost like three markets within this suburb. There are properties on the waterfront, on the canal, and then there are properties on like more the main road area, and then there are properties that aren't on the main road but aren't on the canal either. And you found that even despite Gold Coast property prices dropping, property in general going down a lot in Australia, like let's be honest, these waterfront properties have actually gone up. Believe it or not, I'm not even lying, right? The main road properties have gone down 25%, 25%, and the ones in the middle are somewhere in the middle. So it's like within the same suburb, you'd say, oh, PK, you're making stuff up. I can look up Bundall, I can look up Sorrento, and I can tell you that the median has gone down. But it's like, hey, if I was to sell my house today, I'd get more than a year ago.
Absolutely, and this is the big miss, I think, and again, I think a lot of property players, because they focus on these medium average levels and not focus on quality, because quality always outperforms, and as long as you know what quality is when it comes to property, and then you can create your own economy within property by just focusing on property, regardless of what's happening with market movements. If you're making sure that it's an investment grade property with owner occupier appeal, so that you're making sure that you're appealing to the broad buyer market, then those properties are always going to do well. And there's plenty of evidence of that. I mean, from the sinking values perspective, I've been expecting it because, again, I'm a bit old and crusty, PK, but every time we see a rapid rise, particularly on a broad scale like we did post-COVID, then it's normal for prices to soften. But the really challenging part now, particularly for investors who got excited around the FOMO and the hoo-ha that was talked about property in the good times 12 months ago, is that unless they're focusing on that really A-grade quality property that's had the data-led growth drivers that are supporting it, a lot of property in a lot of areas are going to go down and then flatline for an extensive period of time. So that quality focus is more important now than it's ever been, although it's always been important, I believe. I'd love now to shift into, because you've developed your Property Investment Accelerator course. Talk to us a bit more about what that's about, why you created it, what are some of the key messages that come out of it, and who's best suited to take advantage of that?
Yeah, sure. And I'd probably preface this with saying that before considering any course, like people need to be utilizing the free education available to them through diverse mediums and diverse people that put content out there. Like that's the first thing. Not everyone needs a course. But in terms of the Property Investment Accelerator course, I saw that there was really nothing in the market that was completely independent, that didn't have any upsell, or you want coaching, that's an extra 3,000. You want the tools, that's an extra 2,000. Or by the way, here's a house and land package I prepared. Like just education for education's sake. There was nothing in Australia like that without some sort of conflict of interest or innuendo. The people that it's for, I mean, I can just tell you who my typical client is. They're sort of in mostly Sydney or Melbourne. They are kind of priced out, right? So they're like, okay, We do want to become property investors, but do we really want to pay $800,000 for somewhere past Penrith that's going to be 3%, 4% yield? No. They want to be interstate. When it comes to interstate, they're like, okay, I kind of know Sydney, I kind of know Melbourne because I've lived there for a number of years, but I don't know Perth, I don't know Brisbane, I don't know Adelaide, I don't know regional Australia at all. And I don't want someone telling me where to invest. Like that is like critical. My clients do not want me to say, by the way, don't ask questions. Here's the contract. Trust me, sign on the dotted line. That is not what they want. Rather, they're the 10% of people. They actually are thinkers. They want to learn how to think. They want to make their own conclusions, the right strategy, for them, the right suburb, the right property, how to negotiate, how to get it perhaps a little bit under market value, sharp price, how to do all of that without catching a flight, through local property managers, people on your team that are working for you, not against you, for free. That's really important. And they want to do this sustainably. They want to build a skill and have a mentor at the ready on demand so that they can rinse and repeat. Because none of my clients are like, yeah, I'd be happy with one property. No, they're ambitious. Like they want to, it's not like they want to buy a Lamborghini, but like they just want to build a portfolio so they can effectively just get a comfortable living, right? Like just transition from active income to passive income. That's kind of it in a nutshell. I mean, I can go into the tools and the methodology and the videos and the community, but at the end of the day, like it gets the job done, and that's who it gets the job done for.
Well, you're rather than giving someone a fish, you're teaching someone how to fish so they can feed themselves forever, which is perfect. And I guess sort of leveraging off that in the context of what we've been talking about today, what is, in your opinion, the best way for DIY investors to develop their own strategy, buy interstate, buy good value properties, and be able to negotiate a property purchase? Can you talk us through that and perhaps give us an example or two?
Sure, I'll give you like a really, I always use this example, so people probably heard this one before if they follow me, but I had this client in 2019 or 20. His name's Bennett. He was a new migrant into Australia, literally only been here 2 years, lived in Melbourne, and he wanted to naturally do all of the above mentioned things. So using the tools and the methodology that we provide, he built his own strategy. Now, his strategy is different from my strategy, different your strategy, different incomes, different serviceability, risk profile. He didn't want to be active. I'm happy to be active. He didn't want to be active. He wanted completely passive. So he built his own strategy. And the thing is, Bushy, that it's not like he just put down a few bullet points on a piece of paper. That's my strategy. Like he actually used the financial models that we provide and built out a cohesive strategy. Okay, number of properties, the frequency, this is the serviceability, this is how I can do it. It's not like just arbitrary 10 properties in 10 years. He worked with an accountant and mortgage broker to do that, and he was confident this is the foundation. He identified a suburb called Pacific Pines in the Gold Coast using the data methodology that we teach, and we give all the data. It's not my data, but we teach them how to use it. And Pacific Pines in 2020, this is on the Gold Coast. And so he selected the suburb completely remotely, confidence in the data. Then he used data plus local property managers that we gave him to find the right pockets, the right street in Pacific Pines. And he's just built a relationship. Now, he has an accent. Like, he's not like a true blue Aussie or anything like that. He has an accent, but he kind of overcame that shyness, and just, over a course of 3 weeks, every Monday, 10 minutes, he built a relationship with a few agents. And one time this agent called him on a Wednesday and she said, look, there's this couple who live in this property. They want to sell it because they're having some issues domestically. They don't want it to be public. It's kind of embarrassing for them. This property is yours if you want it, right? And of course, off-market deals are always a little bit smelly. There's something too good to be true. What's up with it? But this just happened to be one of those deals where he got the property manager and nothing was wrong with it. Stacked up from a data perspective. He did his valuation, and because they were motivated sellers, he got it at a sharp price. It was valued at high 500s. He got it for mid 500s.
Awesome.
And that thing has gone up. I mean, everyone knows, how much it's gone up in Gold Coast. It's like worth 800 something now. And like what really what I'm really proud of is that this was a guy, Bennett, that knew nothing about property before, but he was willing to go outside his comfort zone. He was willing to pick up the phone. He was willing to trust data, and he back tested it to make sure that it was legit. He was willing to lean on the team around him, like conveyancers, like building and pest inspector. I mean, he didn't catch a flight up to the Gold Coast. He was, the building and pest inspector, the property manager did all the due diligence for him. And like it's just happy days since then. So like that's kind of what we do. And I think I should also make this point that anyone can do this. Like you don't actually need to do my course. You definitely don't need a buyer's agent, but anyone can do this. If you have the wherewithal with data, you can pick up the phone, talk to local property managers. You can buy anywhere around Australia, high growth, high yield properties. But to take your analogy just one step further, the fishing, I find that some people, you give them all the tools, all the knowledge, they have that fishing rod, they've hooked the fish and they're reeling it in, but it's just like a really big fish. Sometimes they just need an extra pair of hands like on that fishing rod to help, pull it in. And that helps them with the confidence, just that extra assurance that they're doing the right thing. And then you just kind of get that fish over on top of like the platform that you're on, the jetty or whatever, then you can let go of the fishing rod and they're like, I did this myself. And that's a really cool feeling.
Love it, love it. We've touched on this subject a little bit, and what I love about what you've just shared, it's definitely important to have good independent professionals who don't have a vested interest, like the property manager, like the building inspector, like a good mortgage broker who can help you with capacity, like a good accountant who can help you with entities and all the rest of it. The outlier here, to some degree, that we've spoken about a little bit is the buyer's agents. Talk to us about your thoughts on buyer's agents in a bit more detail and other property professionals as far as an investor's needs are concerned.
Sure. And once again, I'll preface this, but I have nothing against buyer's agents. And actually, I think we've produced more than 75 buyer's agents through the course as well. People who didn't want to be buyer's agents, but just fell in love with property, became buyer's agents. So I have a tremendous amount of respect for good buyer's agents. But like I said before, I feel that most aren't good. And even if they are good, they're a bit like gardeners. So let's take that analogy. If you have a garden, we were talking gardening before we hit record, and I was spending the morning doing gardening. To do gardening, you do need to put in some time, right? The best fertilizer is the gardener's shadow. So you need to put in a bit of time. And you also need the right tools, right? You need like the whipper snipper, you need the lawnmower, some gloves, some tools and stuff. Now, the thing that people kind of get into this trap of is thinking, I don't have the tools and I don't have the time. The reality is that you might think doing gardening takes a lot of time, but if you have a bit of knowledge, you can expedite it. Okay, so you don't need to take trial and error and plant the wrong flower only to realize that you planted it in the wrong season or in the wrong location. You can just go on YouTube. Not that I'm saying properties like this exactly, but you can go on YouTube and say when to plant this flower. Okay, how much shade does it need? How much sun? Just with a bit of knowledge, you don't have to do the trial and error. You can get it perfect every time. And with the tools, I mean, we're not living in the 60s, we're not living in the 70s, this is 2023. All the data is online. People will tell you they have their proprietary data, that their data is somehow magical. Guys, it all ultimately comes from domain, core logic, and ABS. Like, let's be honest. Okay, you can package it up and pivot it in whatever way you want, but it all comes from the same providers, and it costs them millions of dollars to maintain. So no one else is doing that as a private enterprise. So the data, go down to Bunnings, get your tools. All right, just hop on those websites, get the tools. Same analogy. And in terms of time, right, property investors who know what they're doing through education take about 3 to 5 hours a week over 1 or 2 months to buy a property. Now, if you don't have that, like if you don't have 5 hours a week, 3 to 5 over a couple of months, sure, pick up the phone, get Jim's mowing or get a gardener to come out and help you. But if you do have that time, you can do it yourself. And the thing is that buyer's agents, the argument, right, is that they're professionals. Bushy, would you do a kidney transplant by yourself, or would you get a surgeon to do that? Would you get a root canal done yourself, or would you get a dentist to do? 100% of people go to the dentist, 100% of people go to surgeons. More than 95% of people don't use a buyer's agent. So yes, they're professionals, but a different type of professional, a more discretionary, nice to have professional, not a professional in the sense that to change in the wiring in this house, I'm definitely going to use an electrician. They're not electricians. They're not dentists. They're not surgeons. All right. They're gardeners. Gardeners are also professionals, guys. Let's not diss gardeners. They're respectable people, but they're not necessary. And that's my philosophy. They're not necessary. The reason people use them more often than not is because all the content in Australia is consumed or like dominated by buyer's agents. They tell you if you don't use them, you're going to make mistakes. And I'm not a big fan of that fear mongering. I've, in my experience, genuinely found that with the right tools, with a dollop of education, and just with that right amount of time, you can do it yourself.
Yeah, 100% agree. And I'm an advocate of buyer's agents for the right purpose and the right one. And it's like anything. If you're going to use a professional, use a good professional, because there's some pretty average professionals out there. And unfortunately, the buyer's agency industry, because of the way they get paid, there's a subconscious pressure for them to get you to buy a property quickly, because if you don't, then they don't get paid. So I think there's some structural issues actually with the whole buyer's agency framework that gets in the way of good situations. And certainly if you don't have time and you aren't able to invest in your own knowledge, do the due diligence to make sure you get a good buyer's agent. But if you're going to be serious about treating your portfolio as a business, which we've both touched on, then you need to invest in your knowledge. And once you've invested in that knowledge, and you don't need that person to do the running around, because you can do it yourself. Now, I love your thoughts on that. Mate, I want to shift now into a bit of your read of what you're seeing with property conditions at the moment, and because there's a lot of talk in various forums at the moment. You know, should I buy now or wait? And what and where are the best opportunities? Can you give us your read of that? And I'll preface this by saying we're not giving any advice here.
Sure.
Because everyone's situation is different and everyone's needs are different. But I'd love you to sort of balance the equation, because there's still a lot of fear out there in the marketplace. And, a bit of if we use a bushy Buffettism, it's times like these that often the best opportunities arise, because everyone's scared and paralysed and sitting like a rabbit in front of the spotlights. What's your read of the current scenario?
So I think people like me who have something to sell always say it's a good time to buy, right? We're incentivized to say that. I like to think about it in a more nuanced way. I think there's always locations in Australia that are worth not buying in, and that there are always locations in Australia that are worth buying in. There's buying windows. You're either in it or you're not. It's quite simple. So I think the whole property landscape, like you alluded to earlier, Bushy, like very accurately, we've just had like record price growth. That's unsustainable. It doesn't happen forever. The average boom in Australia, if you look at 70 years of history, goes for about 2 to 4 years. Yep. We started at the end of 2020. It was still growing like last year, let's be honest. So it kind of went for about 2 years. So, just 2.5 years. Then there has to be a dip. There has to be some sort of correction. That's perfectly normal, nothing to freak out about.
Yep.
At the same time, that is the macro Australian property market's trajectory. Within the micro, if you talked about a property boom at the start of 2021 in Sydney, people in Perth would have been like, what boom? Like, what are you guys talking about? There's no boom over here, right? So the whole point is that there's different cycles for every market. Every city, every suburb has its own cycle. And so the whole point is that, yes, we should be afraid of investing if we don't know what we're doing. If you are just following someone blindly, or if you're like, your friends made money in the boom and over the last 2 years, you're like, FOMO, I've missed out. I'm just going to buy anything. Please don't do that. Please keep your money in your own pocket. But if you actually know what you're doing, it's always a good time to buy. And I've very open about the areas that we're buying in, like pockets of Townsville, pockets of Perth, especially North Perth. It's really, really attractive. And one really cool point that you made earlier around markets within a suburb, the medians can be misleading. You need to buy, especially in these times, properties that will last the test of time, that the owner occupier appeal will always be there. You don't need to be a waterfront property. Even if it's a 400K suburb, buy in the best area within that 400K suburb, because the locals, the demographic that loves that suburb, they're going to love the best suburb, the best pockets of that suburb all the time. The bottom areas or the worst areas in that suburb, those are the ones that tank. So yeah, I mean, there's still opportunities in parts of South Australia. In fact, North Adelaide, not that I'm a big fan of Elizabeth or surrounds by any stretch of the imagination, but that's still growing. And you wouldn't know it if you had just been media, Sydney, Melbourne centric in your consumption of content. So look, I don't think there's anything to freak out about. I'm a big believer of timing the market and time in the market. Both, I think both are important.
Yep.
So to try to catch a falling knife in Sydney, may not be the best strategy, but even in Sydney, there's areas that aren't really falling right now. So yeah, it behooves everyone to get some education and ask ourselves better questions than, is it a good time to buy right now, but rather where and how.
Yeah, and what? Exactly right.
And what?
A combination of all of those. Now, I love that. That's a great response. Thanks, mate. Because it's if you think borderless, and because every area is going through different elements of the cycle, and they're all out of sync with each other generally, then there's a world of opportunity out there, because, as you know, there's over 15,000 different suburbs and nearly 11 million properties in the country. So if you know where to look and you know what you're looking for within the confines of what your capacity is, and most importantly, your affordability. One of the elements that I'd say a lot of investors ignore or put very cursory input into is, what's the actual cash flow affordability of this property going to be when every cost involved in buying and holding is concerned? I'm sure you do this, but some of the work that we do when we're helping investors, we actually get right down to tin tacks to work out how much per week in year 1, 3, 5, 10, 15 beyond this property is actually going to cost or put in your pocket, so that there's no secrets or surprises, and they're comfortable that it is going to be affordable to hold. Because if you're holding a property for 10, 15 or more years, and your life changes to the point where suddenly you can't afford it and you have to fire sale a property, you've just shipwrecked your whole strategy. So all of those elements are important, mate. We could talk about this for hours, and we will at a later point. I'm pretty keen to keep the conversation going, because the more I talk to you, the more I know we're on the same page in relation to the quality information that people need to hear. But, mate, I'm going to jump into what I affectionately refer to as the bushfire lightning round, or the ambush round, which are the old podcast fast forward questions that you always get with a cigarette and a blindfold to answer. and the time starts now. So you mentioned a couple already, but what's your favourite quote and why?
I think it's happiness unshared can scarcely be called happiness. And I think that is by Charlotte Bronte, if I'm not mistaken. And I completely agree with it. The why is, I've experienced it. Happiness own a mansion by yourself. Who wants to live that? You need people to share your happiness with.
Love it. So that's I haven't actually heard that one. So that is a cracker. Shifting into the literary field for a minute, what's the top book that you'd recommend we read, and why?
The top book is, there's so many books. Recently, I read this one by Jay Shetty. He's actually a friend of mine from many, many years ago. We went to a monastery together. That's another story. But it's Think Like a Monk. Think Like a Monk. So the reason for that is he talks about how in our mind, we should think like an entrepreneur, but in our heart, we should act like a saint, like Mother Teresa or something like. So this kind of confluence of two worlds is really interesting to me.
Love it. That's brilliant. I haven't read that one either, so I'm going to make sure I do. Switching back into the investment sphere for a minute, what's both the worst and the best piece of investment advice that you've ever received today?
The best piece of investment advice is buy a property. I'll keep it simple. I followed it. It worked. And the worst piece of investment advice is buy property.
Two-edged sword. Exactly right.
It's like, that's my answer. I won't elaborate further.
No, I think in the context of everything we talked about, that's pretty self-evident what that means. So thanks for bringing that back into our foresight, mate. Final question. What's a personal happy habit, rewarding ritual, or daily discipline that you employ that you think's contributed most to your investment success today?
I meditate every day in the morning. I try to do it for 90 minutes, if not longer. It's not perfect. Mine goes crazy. But meditation, I've been doing that since I was like in high school, and more seriously since university, and it's changed my life. I think meditation gets all the credit to any small things that I've achieved.
Love it. That sort of self-reflection without reflecting to some degree. It's amazing what comes out of that exercise.
Just being non-judgmental, just not beating yourself up, not beating others up, just observing your thoughts for what they are.
Love it. Mate, really enjoyed our conversation. I'm pretty excited about doing more of this. But if we were to summarise our conversation today, what are the key takeaways that investors should take away from what we've talked about?
I think from a finance or wealth perspective, no one cares about your money as much as you do, your future as much as you do. And, really the best investment, the best real estate that you can invest in is the 6 inches between your 2 ears. I really, really, really firmly believe that. Be in that top 10%, the people who actually think, have the right team around you, but question everything, question them, question yourself. Enjoy the journey. It's not about financial independence. It's like it was never about financial independence. Financial happiness is not the goal of life. It helps, but it's not the goal of life. And what else did we talk about? I think, the process of buying data, like I kind of trip myself up because on one hand, I espouse all these spiritual things, but at the end of the day, where the rubber hits the road, it's all about data. It doesn't matter how spiritual you are, how great your marketing budget is. Data is cold, objective, hard fact. And that is what makes you rich, not anything else.
Love it. Love that. It removes our perceptions and our own judgments that we apply to things. And if it's cold, hard facts and you're looking at them over time, so you can read the trends, that's where the magic sits. Love that. Mate, and sort of bringing it to a close, what's new and next for you?
I kind of gave that piece of advice to myself when I was younger. I'm actually looking to just connect with more amazing people, genuinely speaking, like sincerely, like you, Bushy. There's so many investors in Australia and just not investors as well that they have stories to tell, and we can learn from their stories, and they're remarkable, inspirational people. So I think this next chapter of my life is just connecting with as many people as I can to absorb that knowledge.
Love it. For those that have really resonated with your message today, then PK, how can they find out more or get more involved with you?
Sure. The brand is Australian Property Mastery with PK. There's a YouTube channel, 20,000 subscribers. There's a podcast. There's a Facebook community. It's a group of 30,000 people. All the other socials. Yeah, just get stuck with that. Stuck into that free education, and then we can talk about the course at some other time.
Yeah, no, I love it. The challenge for a lot of investors is in immersing themselves in a safe environment where they can openly ask questions and learn without having something shoved down their throat.
Yeah,
it's very few of those, unfortunately. So I love what you're doing in that space and creating that sort of collaborative co-learning community where we can share equally and pick things up as you go. So look, PK, I really appreciate your very generous time today. I am seriously looking forward to continuing the conversation and appreciate you joining us to share your wealth of wisdom.
I'm very grateful. It's my honor. Thank you so much, Bushy.
Thanks, PK. Thanks for tuning in to Get Invested on the Property Hub podcast channel, your home for property investment insights and inspiration. And don't leave yet until you've taken the next step towards living by design by getting my award-winning book, Get Invested, absolutely free when you sign up at knowhowproperty.com.au or bushymartin.com.au. And finally, make sure you subscribe to Property Hub to get your weekly dose of Get Invested inspiration along with every episode of Realty Talk, Australia's leading property show for red-hot property investing news and insights, direct from industry leaders and influencers. Remember to always get invested in your knowledge, and I look forward to seeing you next time.